प्रेजेंटेड बाय ईबिक्स कैश, हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Vakaya. Here are the headlines tonight. Nifty below the crucial 17,750 mark as market extends losses for the second straight day. Sensex down 254 points even as power and metal stocks shine. Cabinet clears relief package for exporters, includes recapitalization and IPO of the Export Credit Guarantee Corporation. Banks lending to exporters also get financial support. Piramal Enterprises completes acquisition of Diwan Housing Finance for 38,000 crore rupees, first financial sector bankruptcy resolution and the biggest till date. Aditya Birla Sun Life AMC IPO opens for subscription, subscribed 56% on the first day. Retail investors' portion already oversubscribed, issue closes Friday. And drones press into relief work in Telangana, deliver medicines to a marooned family with a sick 16-month-old child. Another volatile day for markets ahead of the monthly expiry session on Thursday. Benchmarks opened lower following weak global cues, sharply pairing losses in the afternoon, however, as Europe opened in the green. Nifty settling at 17,711, that's down just about 0.2%. Sensex closing the day down 250 odd points at 59,413. Let's take a look at the gainers and losers for you. NTPC, Coal India, Power Grid, Sun Pharma, IOC on the higher side. A fair amount of PSU names there, 6% gains coming in on the likes of a Coal India, NTPC. Strong run for some of those names. HDFC, Kotak Bank, Asian Paints, HUL, Ultratech, couple of the names on the downside, 1 to 2% of a cut coming in there on those heavyweights. In a major relief for exporters, the centre today announced a slew of measures topped by the release of 56,027 crore rupees this month to liquidate all areas. The Export Credit Guarantee Corporation has also been recapitalized with an additional 4,400 crore rupees. A move that increases the ECGC's underwriting capacity to 88,000 crore rupees, and it will help it guarantee additional exports of 5.28 lakh crore rupees over a 5-year period. The ECGC will also be listed in the stock exchanges via an IPO. In another confidence-inducing move, the government has also infused an additional 1,650 crore rupees in the National Export Insurance Account Scheme. The move will support exports worth up to 33,000 crore rupees in the next 5 years. A common digital platform for certificate of origin has also been launched to facilitate trade and increase FTA utilization by exporters. The existing foreign trade policy, meanwhile, has been extended to the 31st of March 2022. The government contends the moves will create 59 lakh new jobs, including 2.6 lakh in the formal sector. Business Today TV's Rahul Srivastava spoke to the Commerce and Industry Minister Piyush Goyal about the impact of measures announced for exporters.
Last year in December, Prime Minister Narendra Modi said that the adversity in form of COVID-19 has brought an opportunity. Mr. Piyush Goyal, Commerce Minister, today's decisions, do they turn opportunity into betterment for not just increasing exports, but improving the condition of the exporters?
Well, very clearly, the Prime Minister has been very focused on encouraging exports. Through the last year and a half, we have seen a series of steps, one after the other. And through these steps, our effort is that exports should become a very integral part of the Indian economy. And we see that the world today is looking for trusted partners. The world today is looking for countries where there's a rule of law, transparent mechanisms, and friendly countries. And India fits the bill. New resilient supply chains are being created. And in such a situation, our exporters have really come up to the highest expectations.
Today's decisions?
They're meeting targets never seen before. In that context, today's decisions of 4,400 crores infusion into ECGC, 1,650 crores into NEIA Trust will help give much larger amounts of insurance cover to our exporters on their exports, correspondingly banks to extend more loans to the exporters and strengthen their ability to meet larger demands all over the world.
In the first successful resolution under IBC route in the financial sector, Piramal Enterprises has acquired Diwan Housing Finance Limited for 38,000 crore rupees. The deal lets the 70,000 creditors of DHFL, including holders of FDs in the company, recover just 46% of their investments. The rest is to be absorbed as a loss by investors. The total payment includes 14,700 crore rupees in an upfront cash payment and 19,550 crore rupees in debt instruments. The new merged entity, Piramal Capital and Housing Finance Limited, will be fully owned by Piramal Enterprises and will deal in housing, education, business, auto and personal loans.
34,250 is what we from Piramal will be paying for this acquisition. The way it is divided is 19,550 is through debentures, we have raised this money through NCDs. The balance is via. And the second thing is that the creditors will get about 38,000 because the balance 3,800 crores is what was cash lying with, which was to the account of the creditors with DHFL today.
Now, hit by the COVID-19 pandemic last year, the Dubai Expo 2020 makes a strong comeback in 2021. In a biggest event since the pandemic, India is ready to showcase the emergence of a slew of innovations at the Expo. Let's have a sneak peek of the event.
As Dubai Expo will welcome millions in biggest event since pandemic, the India Pavilion is all set to display the emergence of a new India to the world. It is one of the largest and most elegantly designed at Dubai Expo 2020 and will feature an innovative kinetic facade made up of 600 individual colorful blocks. Visitors will also get a glimpse of Indian innovations in space technology, robotics, electric mobility, edutech, e-commerce and energy.
हाल ही तक हमारे यहाँ इंडिया से लोगों को आने में काफी restrictions थे. अब fortunately सब उन्होंने हटा दिए हैं और धीरे-धीरे खुले जा रहे हैं. Flights भी आ रही हैं, भर-भर के आ रही हैं. तो hopefully फिर से build up हो जाएगा.
11 key themes will be represented at the India Pavilion, including climate and biodiversity. This magnificent pavilion will be inaugurated by Union Minister Piyush Goyal on October 1st. And the world will experience country's cultural diversity, Indian art, during the 183 days that the event will run till March 2020. India Pavilion will also be showcasing Indian Innovation Hub platform for the budding innovators and startups to showcase their capabilities. It will be a platform for investors and consumers to experience the value offering and capacity for innovation of multiple Indian startups daily. Dubai Expo 2020 will be indelibly tinged by the pandemic, however. With mask and social distancing mandatory on site, visitors will need to be fully vaccinated or have a negative RT-PCR test to enter. With Neha Batham, Bureau Report, India Today.
A classic tale of technology coming to the rescue. While the entire country prepares for package deliveries by drones and air taxis, a drone helped save the life of a 16-month-old child in Telangana.
Cyclone Gulab lashed coastal Telangana earlier this week, and among those impacted was a family in Kurdi village of Kamareddy district. The family's 16-month-old child fell ill during the cyclone, and there was no way for him to access medical help. A drone came to their rescue. After a few trial runs, the medicine-laden drone flew across the swollen river Manjira and successfully delivered the medicines. The parents had been in contact with a local government doctor who informed the Kamareddy DM's office. Officials reportedly rushed to the area with the drone and the medicines. This is one of the first instances of drones being used in remote areas to deliver medicines, part of the government's ambitious drone policy.
The drones open up immense possibilities. The common man living in these remote areas will straightway get these benefits, and supply of vaccines or medicines or other pharmaceutical products is one example of that.
To please come forward.
Earlier this month, Civil Aviation Minister Jyotiraditya Scindia had launched Telangana government's Medicine from the Sky project. The project is being implemented across the other states as well, particularly in areas with difficult access. Bureau Report, Business Today Television.
Well, it's no secret that tech companies are investing in foldable technology, and Samsung seems to have gotten a head start in the segment. If the recent launches of the Fold 3 and Flip 3 are anything to go by, then Samsung means business. Our tech editor Ayush Alwadi tells us all about what makes these devices so unique.
So while we tell you a little bit more about the phone, adios.
Both the Fold 3 and Flip 3 come with a flagship chip, Snapdragon 888, high-end 120Hz displays and fairly decent cameras. But to make these devices more mainstream, they need to pass the durability and affordability test. Both devices definitely aren't cheap. The Fold 3 now comes at 1,49,999 rupees and the Flip 3 costs 84,999 rupees. Samsung's R&D team has worked on the main USP of these devices, which is the hinge. Yes, the crease is still visible, but by using a pressure-sensitive adhesive on the hinge, the foldable devices are IPX8 water resistant. That means the devices can withstand 5 feet of fresh water for 30 minutes. But can they survive our trial by water?
So now that you know a little bit more about the Fold and the Flip phones, well, this is the moment of truth, what you've all been waiting for. By the way, in that time I flipped them around, literally, so that they'd be wet on both sides. Some interesting tech here on the hinge. The Flip has survived our water test. And now it's time for the moment you've been waiting for. The Fold is also still alive. I'm going to keep testing them. And if you want to actually get an in-depth review, then stay tuned to Business Today for more.
You're with us here on Business Today. You're watching Ask Udayan, the show where we answer your questions on stocks. With me, our very own Udayan Mukherjee, who will be answering all your questions. The Indian stock markets are on an all-time high, creating history every single day. Also, the retail participation in Indian stock markets is rising. So at such a time, the need for more quality information on stocks and investment strategies couldn't be more crucial. And that's exactly what we would do every Wednesday here with Udayan on the show. So keep sending in your questions to us on the number that's on your screen, and we will keep answering a select few on TV and online every Wednesday. Let's begin with our viewer queries now. Our first question today is from Shivangi Sinha, who is from Pune. Listen in to her query.
My question to you is, I am holding 200 shares of State Bank of India at an average price of Rs 369. Can you please advise whether I should book profit or hold? Thank you.
Hi, I think State Bank of India, which I have not been a big fan of over the years, is slowly turning a corner, and you can see that reflected in the stock price now. But generally, I'm not a big fan of public sector banking names, but I think post-COVID, things are slowly on the mend. And if you have to own one public sector banking name, I think it would have to be State Bank of India. But not just because of the core business, where the asset quality problems are slowly beginning to disappear. And I think SBI is doing a very good job of that cleanup. Their provision coverage ratio is quite high, and their recoveries are beginning to grow quite significantly. So I think the balance sheet cleanup aspect of it is moving quite smoothly. But what I think sets SBI apart from other public sector banking names is the quality of their subsidiaries. I mean, if you look at SBI Home Finance, SBI Cards, SBI Life Insurance, and SBI Mutual Fund, these are such strong subsidiaries in asset management, insurance, cards, businesses that I think, frankly, half of SBI's market value is derived from these subsidiaries. So I think if you put it all together, it makes for a nice basket of financial products that you can own through the SBI name. So I would say that if you are the kind of investor which likes to have 4 or 5 banking names in her portfolio, SBI could certainly find its place as one of those stocks. I wouldn't buy any other public sector bank names, but SBI could stand aside some of the private sector names in one's portfolio. This is again not a recommendation to buy SBI, absolutely not, but it's an assessment of the fundamental strengths of the banking name.
All right, here's another interesting question. Santosh Kumar, who's from Noida, listen into his query.
I have 200 shares of Tata Consumers at an average price of 655 rupees. Should I book profit or hold it? Please suggest. Thank you.
I think Tata Consumer is a good company and one should not be in a rush to book profits. I think this, while you are sitting on some profit of about 20-25%, I think the real money is made by investors who buy good businesses and hold over a period of time, rather than keep booking 20% profit, 25% profit every time. But Tata Consumer actually is waking up after a long time, because I think the group is focusing its energies on building a fairly significant FMCG player under that brand name. But because it has a very nice mix of businesses. Traditionally, it's been a beverage player, focusing mostly on tea and coffee. You know that the Starbucks brand is also under the umbrella of Tata Consumer. But increasingly of late, they're focusing on their other FMCG businesses, the foods part of it, through 2 brands. Tata Salt is well known, but Tata Sampann, which focuses on pulses and spices, is an umbrella under which Tatas seem to be having some aspirations on the food and on the food front. So I think if you look at it in combination, while margins in the tea business hopefully will start improving this year, and that's been a bit of a laggard, you will see the non-tea and coffee part of the business also growing quite significantly. It's not a cheap stock, trading at about 50 PE multiple, but I think with the kind of focus that the Tatas are giving it now, it may just be a stock to own for the longer term and not to be traded in the near term.
Ramesh Kumar from Hyderabad wants to know about Bajaj Finance. What exactly is his query? Listen in.
My doubt is regarding Bajaj Finance. Shall I hold it for long term or short term?
No, this is a long-term horse, my friend. I don't think you should be giving it up in a hurry. The stock has run up quite a bit, and I can understand why you phrased the question by saying your doubt. And I suspect a lot of people are doubtful about whether to hold on to Bajaj Finance after such a powerful rally that it's had over the last few months. But I think what the Bajaj Finance management is trying to put together is probably India's defining fintech company. Because again, this is a very unique combination of businesses. It's not a bank, but look at what they have. I mean, they are present in the digital wallet space. They're one of the biggest players in the consumer loan space. They're very strong in insurance, and now they have an asset management license as well. And very soon, the way the management is speaking, I think they will put it all together into some kind of an app, which will become probably one of the most defining fintech apps in the country. So how seamlessly Bajaj Finance makes a transition from the real world of lending to the digital world of lending, which it is already knee deep in, I think will define whether the stock can hold on to these lofty valuations. It's never been a cheap stock. It still trades at more than 8 times price to book on FY23, 40 PE multiple, and you will probably never be able to buy Bajaj Finance cheap. However, it's a volatile stock, and periodically when markets correct, it gives you these violent corrections of up to 15-20%. And for long-term investors, those are the opportunities to pounce on Bajaj Finance. I think, to answer your question, this is a long-term portfolio stock. And while it gives you trading opportunities, I think the real money, as people have found out, is in the long term with a stock like Bajaj Finance.
Okay, here's another query from Tuhin Batra, who sent us his question from New Delhi. He wants to know, for a 5-year horizon, do you think the price of Page Industries stock will actually double in that time?
after such a dream run all the way up to 2017-18, I mean, Page was one of the biggest multi-baggers. Somehow it seems to have, the stock that is, has lost its way. You know, it's been grinding in that range of 20,000 to 30,000, but it's never had a meaningful breakout out of the previous high, which it hit in 2018, which was something like 35,000 or so. But and I think there are good reasons for that, because somehow Page is not able to grow at the pace at it which it was growing in 2015, 16, 17. And that's partly because the competitive intensity in the market has grown up. There are many strong players who have entered the innerwear fray. And the bread and butter of Page Industries, which is the men's innerwear segment, that has slowed down. And therefore the market is very doubtful on whether Page can continue to grow at the pace, 35-40% a year, which investors were used to in the past. And that's the reason the stock has moved into a range and has been consolidating for the last 2 or 3 years. Now, they're trying to do interesting things with the athleisure segment, and we will see if they can rediscover the magic in the innerwear segment for men and women. But one thing is clear to me, that from this kind of valuation level of 65 PE, Page probably is not in a position where valuation multiples will give you any return in the stock. I think it will have to be earnings driven from here on. If earnings grow, then the Page stock will move higher. But I don't think the 60-65 P multiple can go back to 90 or 100 P multiple once again. So I think now the road ahead for Page becomes a little tougher than what investors were used to, and therefore the gains in the stock might also be more steadier than the run that they saw between, say, 2014 to 2017.
All right, we'll leave it there on the show today. Udayan, thanks so much for taking the time out. And if you have any queries for us on Ask Udayan, then simply send them in to us. WhatsApp us on the numbers on your screen, and we will answer them next Wednesday. Until then, goodbye.